You're funded. Those simple words are often the difference between an idea amounting to nothing and great tech innovation becoming reality. But who are the people murmuring those make-or-break words when it comes to crypto projects? Well, a lot of the time, it's crypto venture capitalists. These guys' job is to allocate their investors' money into the crypto markets and make gigantic returns. Those investors are the types of people that don't bat an eyelid at a $100,000 investment minimum. But if there's one thing I've learned about rich people is that they don't like losing money. So you can bet your bottom Satoshi that the top venture capitalists know what they're doing, or they'd be out of a job. In this video, I'm going to share my list of the top crypto VCs to follow, give you an overview of each, and highlight some of their best exits and early-stage token investments. Knowing these funds and their investment strategies may even help inform your own investment strategy as it helps you shortlist potential projects to invest in. So, it's something you cannot afford to miss. Before I get cracking, I need to level with you on a few things. I was a bit of a reprobate at school. I skipped those financial advisor classes to drink warm beer in the park with my mates. Yes, that seemed a good idea at the time. However, it meant that I never graduated from that class, and to this day, I am still not a financial advisor. Those past transgressions mean that everything in this video is purely for entertainment and educational purposes only. My name is Guy, and I am your crypto guy over here at the Bureau. Me and my crack team of researchers have one mission in life, and that is to bring you the best crypto content on the tube. Unless you like making schoolboy or schoolgirl errors, you'll want to join me on that journey by smashing that subscribe button and flicking that little bell. Do that, and you'll be the first to know whenever I release another crypto video. One more thing, check out the handy timestamps below. They are there to make it easy to skip ahead. However, I don't think you'd want to miss any of the nuggets of gold I'm about to share. Okay, are you ready to learn about the masters of the crypto universe? Let's dive in. Before I get started on my list of top crypto VCs, I should preface this by saying that I've placed these venture capitalists in no particular order. So, with that out of the way, I'd like to move on to my first pick, and that would be Pantera Capital. Now, these chaps were the first US institutional asset managers who focused exclusively on blockchain. Pantera Capital was actually founded in 2003, although they shifted their focus to blockchain investments in 2013. This was back when Bitcoin was priced at a meager $65. That's an eternity in crypto and means that Pantera has a plethora of experience that simply cannot be matched by many other crypto VCs. But maybe Pantera just got lucky with their timing. Well, just because you were the first to do something doesn't necessarily mean you're any good. Well, I don't think many venture capitalists get $3.2 billion worth of assets under management without being pretty solid at crypto investing. That mind-boggling AUM is actually split between 5 different Pantera Capital funds. The first is a blockchain fund, which offers actively managed exposure to all areas of the crypto and blockchain venture capital markets. That includes venture equity, buying stakes in crypto companies, early-stage token sales, and exposure to publicly traded crypto assets. Secondly, they offer something called a liquid token fund. That's just a fund composed of actively traded tokens. Next, Pantera offers an early-stage token fund, which basically focuses on private sale investments prior to public offerings. The fourth fund is a plain vanilla Bitcoin fund, giving investors exposure to the granddaddy of all cryptocurrencies. And finally, they offer a venture fund, which focuses on private equity investments, aka buying a piece of a promising early-stage crypto business. Now, maybe you're thinking that one of these Pantera funds is exactly what you're looking for. However, I hate to break bad news. All those funds have minimum investments ranging from $100,000 to $1 million. So, unless you have that sort of money hiding down the back of the sofa, then I'm afraid you won't be able to invest in them. Sure, people like you and me might follow crypto VCs to help screen projects when doing that all-important crypto research. But what if you had a VC firm that did the same thing? They could just piggyback off the hard work of other venture capitalists and potentially look like geniuses. Well, I can tell you that this is not at all the case with Pantera, seeing that they led 50% of the deals that they've been involved in. That 50% spans 75 venture investments and 54 early-stage investments too, so not exactly a small sample size. Now, that top-level overview may seem impressive, but who are the people behind those numbers? Well, the founder and CEO is a chap called Dan Moorhead. Prior to founding Pantera, he used to be the head of macro trading and CFO at Tiger Management, one of the most prolific global macro hedge funds. He also started his career at Goldman Sachs, where he worked as an asset-backed securities trader. So yeah, prime Wall Street pedigree. Then you have co-chief investment officer Joey Krug, who co-founded Augur, which was one of the first dApps built on Ethereum. Now that showed a lot of foresight when it came to spotting the trend of decentralized applications before they really became a thing. Then you have the likes of Paul Vereditikit, who focuses on Pantera's venture capital and early-stage investment funds. It turns out that he is also super well connected, given that he sits on the board of Alchemy, Blockfolio, and Staked. What's interesting is that Paul also seems to be interested in developing the crypto talent of tomorrow by acting as a mentor at the House Fund, Boost VC, and Creative Destruction Labs. Oh yes, he's also an advisor for Audius, Ampleforth, and Set Labs. Next, we have Franklin Bai, who is the director in charge of portfolio development. Prior to Pantera, this chap was a vice president as well as the blockchain and crypto strategy lead at JP Morgan. On top of that, he has experience in early-stage investing from his time at FBG Venture Capital and advised founders at Techstars, all useful skills when investing in crypto tech. There are, of course, many other members of the Pantera team, and you can read more about them on their website. However, what's clear from this is that these guys are anything but casual crypto dabblers throwing darts at a board. Between them, the Pantera team has shown the ability to spot key trends in the crypto market ahead of time, demonstrated experience in early-stage investing, and have a ton of connections in crypto too. All the ingredients that help pick winners. But just because a team has the skills to make great crypto investment decisions, it doesn't necessarily mean that they can pull it off in the real world. Yes, it is true that not every investment is a home run. However, Pantera has had some pretty impressive winners in the past. In regards to venture exits, they acquired a position in Blockfolio back in 2018 during the Series A round. Yes, the same Blockfolio you're probably using to keep track of your crypto holdings. That position was successfully exited when Blockfolio sold to FTX for a whopping $150 million. When it comes to active venture investments, a stake in Ripple was acquired way back in 2013. Flash forward to today, and you'd be right in thinking that Pantera is up a pretty penny on that one. Now, while venture capital is one thing, early-stage token investments are a completely different beast. I'm sure most of you are familiar with Polkadot. Well, turns out that Pantera backed that one early stage for some pretty impressive multiples. And speaking of Polkadot, it's a crypto I hold in my personal portfolio. And if you want to learn more about the project, then I definitely recommend you watch my deep dive over here. But there's one more thing that I want to highlight about Pantera Capital, and that would be their industry insight reports. These are honestly some of the most, insightful reads in the crypto space. So I would definitely recommend you check those out. I've popped a link to that in the description below. Pantera Capital is one of the OG crypto VCs with a damn impressive track record spanning many years. Now, personally, I can certainly sit up and take notice if they have backed a particular project. But what happens if you'd like to get some insight into the Asian crypto VC scene? Well, I think I might have just the crypto VC you're looking for. My second top crypto VC has got to be FBG Capital. This VC firm was founded in 2015 and is based in the Asia-Pacific region. They have made a total of 45 investments in the crypto niche, with 13 of those being lead investments. But who is the tip of the spear at FBG Capital? Well, that would be founder Vincent Zhao. Needless to say, he is an early investor in a broad range of blockchain companies and projects. But what's more interesting than that is that he's widely considered to be one of the most well-connected crypto hedge fund managers in Asia. But how has FBG done in terms of backing proven winners? Well, back in 2019, there was an unknown crypto derivative exchange raising funding of $8 million. That exchange turned out to be FTX. And yep, FBG Capital was one of those early backers. At the time of shooting this video, the FTX token had a market cap of around $2.4 billion. I shudder to think what the FTX exchange is valued at today. When it comes to successful VC investments, I am a firm believer that knowledge is power. Given Vincent Zhao's connections in Asia, you can't ignore FBG's backing when it comes to Asian crypto projects. So, if that's your cup of tea, you'll want to keep an eye out for these chaps. But maybe you're more interested in VC firms that incubate crypto Goliaths and want to know which VC has made serious moves in the DeFi space. Well, if that's you, I think I have the crypto VC you need. My third top crypto investment firm is Alameda Research. It was founded in 2017 and has over $1 billion in AUM. Unlike the previous two firms, Alameda's investment strategy is more broad. They're not exclusively limited to early-stage VC backing. They take a quantitative approach to investment and actually incubated and now operate the FTX exchange. Yep, the same FTX that FBG Capital invested in. It turns out that FTX is now one of the largest derivatives exchanges in all of crypto, with daily trade volumes of over $10 billion. On top of that, Alameda also has built sophisticated trading algorithms that enable them to offer market-making services. Because they trade hundreds of millions of dollars a day, they can also offer really competitive OTC services. Now, what's interesting is that both services are immensely useful to both crypto projects and companies alike. Pretty helpful for building up connections in the crypto space. Take a quick look at the Alameda Research team, and it becomes instantly apparent that these guys have vast trading experience. I mean, you have Caroline Ellison, who worked at Jane Street as a trader on the equities desk. Sam Trabucco worked as a trader on SIG's bond ETF desk. Then you have Sam Bankman-Fried, who was a trader at Jane Street Capital's international ETF desk. Elwin Sim traded emerging market equities at Flow Traders before joining Alameda. The only two chaps on the team without previous trading experience are Nate Park, who worked as an engineer for a VC-funded startup, and Ryan Salame, who worked at Ernst & Young before heading up the Alameda Research OTC desk. So, with that sort of background, it's not surprising that these guys incubated a crypto derivatives exchange like FTX. What's interesting is that Alameda Research has backed a wide range of different DeFi plays too, and many of these are tightly intertwined. With all that trading background rife in the team, it's maybe not surprising that they've set their sights on the DeFi space. For example, Alameda led a $40 million investment round in Oxygen. This is a decentralized prime brokerage protocol that will offer brokerage services that have traditionally been limited to investment banks and hedge funds. However, this will be open to everyone and be without centralized control. Another fascinating thing about Oxygen Protocol is that it will integrate into Maps.me, bringing a potential user base of more than 100 million into the liquid DeFi Serum ecosystem. And guess who created the Serum Foundation? Well, that would be FTX and Alameda Research. Now, in case you didn't know, Serum is basically a next-gen decentralized exchange built on Solana. But who led Solana Labs' epic $314 million funding round in a DeFi push to rival Ethereum? Well, that would be Alameda Research too. Now, I recently did a video all about Solana, so if you're interested in learning more about the project, you know where to go. Now, personally, what I find really interesting about Alameda Research is how so many of their DeFi plays interconnect and strengthen each other. Many crypto VCs appear to take a more siloed approach to funding, and that's why, when it comes to VC-backed DeFi plays, I always check if the project is backed by Alameda. But maybe you find it hard to trust names that you might not have heard of, like Alameda, FBG Capital, and Pantera. Possibly you'd place more weight on a VC fund run by one of the most recognizable names in crypto. Well, if that's you, then my next VC pick will be right up your street. My fourth crypto VC to watch is Coinbase Ventures. As you might have guessed, this is the VC arm of Coinbase, the very same Coinbase that many of us used to get our first crypto holdings. Coinbase Ventures was actually funded in 2018 with the vision to provide financing to promising early-stage crypto companies that have the teams and ideas to make waves in the crypto space. As you'd probably expect, these chaps have made some serious moves in the crypto space over the last 12 months. Coinbase Ventures has taken part in $736 million in deals over the last 12 months. A combined total of 69 projects and companies make up their VC portfolio. When it comes to the Coinbase Ventures team, there are two key players you should know about. The first is Emily Choi, who is Vice President of Corporate and Business Development at Coinbase. She basically specializes in things like mergers and acquisitions, investments, corporate strategy, business development, international and angel investing. So yeah, all the things you'd expect from a top person at a VC firm. Then you have Sean Agarwal, who is in charge of evaluating investment opportunities, sourcing new deals, and working with existing companies in the Coinbase Ventures portfolio. Now, those roles played by Emily and Sean sound impressive, but just how good are they at their jobs? Well, it turns out that Coinbase Ventures invested in Matic, now Polygon, during their seed round. That round priced Matic tokens at just 0.079 cents. Flash forward to today, and Polygon is now trading at over $1 a token. So yeah, you do the maths there. It's a pretty insane return. But how have Coinbase Ventures done on equity plays? Well, they've created several successful exits, and one of those would be Curve. Coinbase Ventures got involved in a $23 million Series A round, and within a year, Curve was sold to PayPal for a crazy $200 million. Now, I've got one more thing for you to think about. Many of you will know about the crazy increases in price that we've seen from Coinbase listings. Now, don't you think that a Coinbase Ventures-backed project has a better chance than most to be listed on the exchange? If you believe in the Coinbase effect, then you will no doubt want to watch out for those projects that are likely to be listed here. It'd be great if there was a video on all this. The truth is that juggernauts like Coinbase haven't always been able to retain talent, and some previous employees have moved on to do big things in the crypto space. And it just so happens that there's one ex-Coinbase employee that moved on to start their own crypto VC firm. Olaf Carlson-Wee was Coinbase's first hire. Sure, being employee number one for perhaps the most recognizable exchange in all of crypto is a sort of claim to fame. However, that was not enough for Olaf. After years of service, he went off on his own to found Polychain Capital in 2016. But what is Polychain all about? Well, unsurprisingly, this VC firm focuses on generating exceptional returns for investors through actively managed portfolios of blockchain assets. The company runs 3 funds, with Polychain Ventures raising $175 million. Then you have Polychain Ventures LP and the Polkadot Ecosystem Fund. Now, what's interesting about this Polkadot fund is that it was part of a collaboration with the Web3 Foundation and was, of course, dedicated to funding projects built on top of Polkadot. So if you're into Polkadot projects, then you'll definitely want to check if Polychain Capital are backing them. To date, the VC firm holds 89 investments. When it comes to the Polychain team, of course, we have the founder and chief investment officer, Olaf Carlson-Wee. He used to be head of risk at Coinbase, which was probably very good training for his current role, because venture capital is all about weighing up risk versus reward. Then you have Jing Sun heading things up as an LP investor, William Wolf as a researcher, Ryan Zura as principal and venture partner, and Tekin Salimi as general partner. Ultimately, Polychain Capital has a pretty small team of 7 people. But what's more important is how that team has done deploying that capital. Well, in terms of equity investment, it turns out that even though Olaf left Coinbase, he's still pretty highly thought of there and actually secured equity investment in the business. Needless to say, Polychain must have done pretty damn well when Coinbase IPO'd earlier this year. But how has Polychain done with token plays? Well, one of the more interesting investments was actually Compound Finance, with Polychain getting involved at seed round and a later Series A. Given that Compound now commands a market cap of over $1 billion, it's safe to say that Polychain has done pretty well out of that initial investment. Yes, I know many of us don't really like Coinbase all that much. However, if you're looking for a non-Coinbase VC that has strong connections over there to help facilitate Coinbase listings, then you'll definitely want to keep tabs on Polychain Capital. Now, that's about all I have time for today, folks. However, I do want to share a few closing thoughts. It is true that crypto VCs get access to significantly cheaper tokens than we do through private sales. So it's just a sad fact of life that us mere mortals are never going to get the opportunity to make the same crazy multiples that these guys do. I actually did a recent video sharing the truth about crypto private sales, so you may want to check out that vid after watching this one. It's linked to in the top right corner. On top of this, folks like us are frankly completely excluded from all those equity opportunities too. Sure, if you have the money to meet those minimum investment requirements, then you could opt to place your funds under crypto VC management. But let's face it, who's got that sort of money kicking around? Now, with that being said, I think it's a massive mistake to ignore the moves being made by crypto VCs, and the truth is that most of these firms' holdings are publicly available information. Think about it. Most of these VC firms are tasked with generating long-term returns for investors, and they live or die by their investment picks. So, top-notch research is something all these guys invest in. That brings with it a massive opportunity for people like me and you to piggyback off that research by scoring a project higher when it has strong VC backing. That's pretty useful when you're analyzing opportunities and weighing up the possibility of adding a cryptocurrency to your own portfolio. That's something that just isn't part of most people's research game, and I found it to be quite an effective method to screen projects and quickly make solid research shortlists. But I do need to warn you. Just because top VCs back a project, it doesn't mean you should blindly chuck money at it. I mean, you have to consider factors like what price you're getting in at. Also, remember that even VCs don't get it right all the time. They are humans and do back their fair share of lemons too. So now it's time to hear your thoughts. What do you think of crypto VCs? And have you got any questions for me? Use that comment section. While you're beavering away down there and making that top-notch comment, I want to tell you about my socials page. Here I share the official links to my Telegram, Twitter, Instagram, and TikTok. If you want to see exclusive content from me that's not on the tube, then those are the places to go. That includes stuff like my personal trades, portfolio updates, and hot takes on the market. So, link to all that is below. And finally, if you think this crypto professor is doing a good job, then give me that gold star by smashing that like button. If you'd like to sign up to see more of my crypto vids, then you can enroll with the Coin Bureau by gently tapping that subscribe button and punching that little bell. Class dismissed.